Welcome to the Eureka Street Crypto Podcast.
Good afternoon, everybody. Welcome to Eureka Street Crypto Podcast. Normally, I would say good morning, but I haven't been doing this in the morning. I haven't really been doing this show at all. My last episode was with the Cult DAO, covering that project and the Revolt token, and that got an amazing response. I actually made 1,000 subscribers for the first time ever. So hey, whatever, feels great to finally get 1,000. Of course, 2 people unsubscribed immediately, and it went back to 998. But hey, I hate 1,000, and that's all right. Anyway, so yeah, thanks for the response on that. I'd like to do another episode covering Cult DAO and the Revolt token to talk more about the tokenomics of it, because I talked a lot about the ideology of it. And yeah, man, it was a fun episode. But this episode, well, first of all, I've been doing this since October 24th, 2020. This is my brain dump to be able to just talk about things that I learn in crypto, and I learn something new in crypto every single day, whether or not I broadcast. This is my message in a bottle to other Web3 folks out there and other people curious about crypto, and just even check up and see how I'm doing. And then, and this is my sandbox to be able to just play with ideas, play with audiovisual stuff, and just to test things out and experiment. So take nothing I say on here seriously. Take it all for a grain of thought and think of it as a process, and I'm a human being and I'm learning. So I might say something completely off base, and that just happens. And it's just part of learning, and everybody in this crypto space is learning, so everybody's kind of off base right now. Nobody knows what to do with this new technology, how to regulate it, how to approach it. We just had the merge last night, and who knows what's going to happen after that. And I love the unpredictability about the crypto space. So that's why I do it. Anyway, so today I have a very special episode. A friend of mine, he goes on Discord by the name of Comeback Kid, but his name is Mike Rabinovici. He's an former lawyer from Canada, and he has a podcast called the Ab Initio podcast that I've helped produce. So yeah, man, we've been partners on that, and that's one of the Bankless DAO Legal Guild podcasts as well. He's been an absolute pleasure to work with. Super amazing guy, is very knowledgeable about the crypto space and about regulatory structures, about all the stuff that I didn't really know about coming into the crypto space, and I've kind of had to give myself a crash course on. So yeah, he's been kind enough to allocate some of his time to come on my show and explain some of these topics. So yeah, I pre-recorded it, and so I'm going to play it. And he touches on some really interesting concepts and defines a lot of basic terms. So if you know all these terms, have some patience, but I'm trying to paint like a whole picture of what's going on between new people coming into the space and regulations, Web3 ID, about accredited investing, about commodities and securities and what all that means, about what KYC and anti-money laundering means, and how it all fits together in the grand scheme of things. And that's really what I'm just trying to get at, like a macro view in this interview, and where crypto can go with all this and what we're trying to do. So anyway, enjoy it. And drop Mike Rabinovici a note. He's Comeback Kid on Discord and on Twitter as well. And you can see him as Mike Rabinovici. It's RABINOVICI on LinkedIn. So, all right, enjoy. Hey, Mike, thanks again for agreeing to come on the show and for giving us a little bit of schooling and lessons on what all this stuff means, because I came into crypto with zero knowledge about finance. I went through college and then through grad school, never once took a finance course, and I just was suddenly just giving myself a crash course. And the first white paper I ever read was for synthetics, which is, if you're familiar with synthetics, is decentralized derivatives. Yeah. But anyway, thanks again for coming on. And let's give a little intro to you. You are a lawyer by trade, correct?
I am a recovering lawyer, John. I that's how I refer to it. I don't practice, but yes, I don't give advice, but certainly do a fair bit of consulting on in the Web3 DAO space.
Sure. Yeah. So what brought you in as far as being interested into the Web3 crypto DAO space? Was it crypto first? Was it the speculative aspect, or what went on there?
I love the trading aspect, but that wasn't really the main event for me. Um, like a lot of us looking at the world over the last, I would say 5, 10 years, we've become increasingly dismayed at what's going on out there. And I think that, and my kids will argue with me on this point, my feeling is that beyond environmental issues and geopolitical issues, I think the basis of what we're really struggling with is a ever increasing inequality gap,
Okay.
and something that two people could look at from the same angle, be it with some differences, is becoming further apart. And I think that what we all have come to realize is that the last 2, 3 years of a pandemic, if anything, have exacerbated this inequality gap.
Huh.
And I think that is really if we can hack that, the solution for that, I think that figuring out the environmental challenges, figuring out geopolitical challenges, figuring out political toxicity is going to be within our reach.
So is it safe to say that you see or saw at the beginning crypto as kind of a potential vehicle to help close that inequality gap?
To be honest, I'm not a financial guy, so I wasn't as well versed in that argument.
Yeah.
In terms of having a currency that's not dependent on a federal reserves and is kind of more of the real world as opposed to the paper printing world. But what really drew me was, my first exposure to crypto was in 2017.
Okay.
So
during the boom of it all.
I did get to see a winter. So in the silver lining of that experience was that I'm not as phased by it as it is now, but I'm kind of really more focusing on the fundamentals and what we're doing. But I think that, on staying on the theme of the inequality gap, I started to think about how do we solve that? I mean, what is the best way to go about it? And when I came across the concept of Web3 and the concept of DAO specifically, I began to realize, and the blockchain, I began to realize that, wow, we might finally have the technology that could really make this world a better place in a far more egalitarian fashion than we did before. And when you combine the ethos of Web3, which is really, in my view, has always been community, with the idea of a DAO, which is a fundamentally different way of governance, I thought that we might have the pieces to really start making a difference. And that's what really attracted me.
Oh, okay. So yeah, you started out with a lot of big picture ideas rather than just kind of speculating. I stumbled in it purely by speculation, honestly. And my first real experience with kind of the inequality gap, I guess, was when I was trying to get ahead, and I owned XRP and Ripple, I admit, but
yes.
I was trying to buy Ripple stock, and it hadn't come out on the large market yet. And so there was some private, I guess, marketplaces that you could buy it at without it being completely out on the public market yet. And so I went in and I registered and all that, and I gave all my information. And then suddenly, after I complete the application, it goes to another window and it says I have to be an accredited investor and I have to have $250,000 of assets or something like that to my name. And, I was just, I didn't have that, and just sitting around in my bank account. I don't have $250,000 just sitting there. So I didn't qualify to be an accredited investor, and it pissed me off. I was just like, man, what the heck, man? I'm trying to learn about all this stuff. I'm trying to actively do something with my life and to invest in some really good opportunities that could help advance me. Why is this glass ceiling there? So can you tell us a little bit about accredited investing, first of all?
So governments, as they want to get involved in different aspects of governance and policy making. And I believe that absolutely their role is not to get involved in minutia, but in the policy making aspect of it. And then let citizens figure it out from there and come up with the best solutions. But everybody's going to acknowledge that in the markets, you're going to have some bad actors.
Okay.
And the accredited investor exemption was intended, and it's been around for decades, to protect investors that may not have the knowledge or wherewithal or sufficient amount of money to sustain a loss from nefarious actors. And that made a lot of sense. However, as the world evolved, as economics revolved, as Web3 and crypto and DAOs came along, we realized that some of these exemptions were not available to regular folk because they simply could not meet the accredited investor criteria. And basically put, without getting into a lot of details, to be an accredited investor, as an individual has to have a gross income of exceeding $200,000 or exceeding $300,000 with a spouse that has been sustainable for at least 2 years or longer. And as well, they need to have $1 million net worth along with their partners, a net worth that exceeds $1 million. But, and this is a big but, especially in these days with the prices of real estate, it has to exclude the person's primary residence.
That's exactly. And I was like, okay, I can do that. I got my house, but then no.
Not so fast.
Yeah.
Not so fast, John. But so what I start to think about is that, the other criteria that are added on is your level of education and how knowledgeable you are. And, when you look at what those educational requirements are, there are very specific accredited education requirements or financial certifications that financial professionals get.
Okay.
So what I start to think about is, let's say you have your 50-some-year-old that's had a decent career, has got some good savings, and they got a financial advisor, and that financial advisor sees a crypto deal, perhaps in a better time than a bear market. So they call their client and say, John, I have this good deal, can we put in 50 grand? If that advisor has done well for you, you may just say, yeah, go ahead, sure, we've done well together. Or you might say, well, I'd like to find out a little bit more about it, and good luck understanding what they were talking about. And I even doubt the financial advisor knew what they were talking about, right? Somebody pitched it to them, and they've made money with that person before. They have that trust in them. So they decide to bring their book or their clients into the deal. Now, let's compare that to somebody that's, let's say, in their early to mid 30s. They got a house, mortgage, a couple of kids, but their passion is Web3, and they spend a lot of their free time listening to podcasts like Bankless HQ and like Crypto Vision Works with Raoul Pal and Ash Bennington. And they become super knowledgeable. But they could never touch that kind of deal that the 50-some could touch because, A, they're unlikely to hear about it. And even if they heard about it, they would be prevented from getting into it in the same way as somebody that is an accredited investor. Now, what dawned on me was that all of a sudden this shield, this way to protect investors that are not as knowledgeable or as wealthy from being taken advantage of, now has become a hindrance. Now, am I saying that they should be able to toss whatever money they wanted without knowledge? Absolutely not.
Yeah.
But what it is time for, John, is a fundamental restructuring of the accredited investor exemption. So other folks that do not qualify by these standards, which I think are way too high, and can qualify by. So there's many ways to do it. For example, what if, so under the accredited investor exemption, I'm not a securities lawyer, but I've been around some, there's no limit as to what you can put in. There's other exemptions where there's some limitations. So, why not create a new exemption for people that don't have the $1 million and limit them to, let's say, $10,000 or $20,000?
Okay.
Because if you've saved a certain amount of money and you're willing to invest that, and you got into crypto early on, and you spread your, let's say you took your $20,000 and spread them over 4 investments, so it was even $5,000 each. There is a chance that if you're at the right time and you understood the product that you're investing in, and it wasn't just a FOMO play, you might have made a life-altering investment.
I mean, I've heard about people starting out with $200 and they just build up and reinvest, and using different leverage engines and all that type of stuff on smaller chains than Ethereum, and they ended up with huge to be qualified in the end as an accredited investor after that. But anyway, continue.
But see, that's an interesting point, because anybody can do what you said. They don't have to be an accredited investor.
Yeah.
Whether it was an ICO and it should have been allowed to begin with, that's a different discussion. But my point is that when accredited investors get opportunities that are far more likely to succeed often than taking a chance on some speculative coin,
Yeah.
because it comes from somebody that has vetted it. It comes from investors that are sophisticated. So chances are it's still risky, but far less risky than putting your money on some fly-by-night coin. And if you get lucky, you can become, as you say, an accredited investor overnight. So
Yeah.
the point is that the inequality here, John, exists it's an inequality in access to opportunity,
Yes.
right? And that to me is the crux of it. Why are we not creating a system where people with less money can still take advantage of these kind of opportunities? Because when we don't do it, if we let the system continue to go on as is, we're just going to increase the inequality gap, and it's going to be more difficult, more challenging, more toxic to be able to roll that back. And I think there's a way to do it where the SEC can be satisfied that the retail investors are protected, but also smaller folks that did not have an opportunity before are going to be able to reach out and grab a piece of the pie, which, again, I'm Canadian, but everybody getting a chance at a piece of the pie is the American dream, as I understand it. And it's not about, nobody guarantees you anything, but at least you have the opportunity.
Yeah.
The other thing that I would love to see is, opposed to looking at education in very through a traditional lens of, well, you got to get this financial certification, or you have to attend this and get a certificate. Why don't we broaden it to something that is more relevant? For example, in my view, Bankless HQ and Crypto Vision. Do I call it right? Is the podcast we're all called Crypto Vision?
No, it's I'll have to look back at it. It's not Crypto Vision.
It's maybe Vision Works. It's something with vision.
Yeah, it's Ralph Paul's, but it's like an education service. It's not a service,
I want to
but
make
an
sure.
educational
I want to make
platform.
sure.
Yeah.
It is. I want to make sure that I get that right. So let me. Real Vision Crypto.
Real Vision. That's it.
It's called Real Vision Crypto, right?
Yeah.
So I mean, in my view, those kind of podcasts and educational platform should seek to be certified as accredited institutions.
Accredited educators.
Because,
educators,
because to me, I'd much rather listen to Ryan and David on Bankless HQ and their guests, or to Ralph Paul and Ash Bennington, who are amazing, and the rest of their team. I think that that's how I got educated.
Okay.
Right. And I learned far more than if I would go to one of these traditional certificate programs that teach me. And that's important too, don't get me wrong. But if I want to invest in crypto and in protocols and in projects and in DAOs, I want to hear from the very best.
Sure.
In that specific discipline. And so I think we got to redo the limits with some guardrails.
Okay.
And I think we got to redo the way to get qualified as an accredited investor. And maybe there's going to be more than one kind of accredited investor. Maybe there's going to be a crypto accredited investor. And maybe there's going to be other types of accredited investors. I think that this monolithic approach with these set numbers are really preventing a lot of good folks that are knowledgeable, are willing, and are smart with their money to take advantage of life-changing opportunities.
Well, that's what DAOs are kind of creating. They're creating these horizontal, flat organizations rather than top-down. I mean, you can imagine how much, in order to be a financial advisor, how much those classes are to take that a lot of times companies pay for, but the average person would probably couldn't afford those classes in order to become certified without the capital behind them. And a lot of DAOs, I think, are fixing this, because there's this open current DAO, and they call that knowledge that's out there the fresh knowledge gap. Like you have right now, Bankless HQ and Real Vision attempting to create these educational platforms and create some kind of legitimacy of education in the space. Yes, maybe they could do a type of credentials program, but there's always somebody trying to be the rent seeker and to be the person who the piper is paying, or pay the piper.
Wow.
And so who is the person that gets to do that?
Well, that's bottom line. This is something that needs to be addressed by the politicians.
Yeah.
Good luck to us all. And they might have other more pressing issues to deal with, but to me, if you agree with my thesis that the inequality gap is really the fundamental issue that we have to address so we can address together everything else, then this is really important.
Yeah.
And it's not just important, but I mean, time is of the essence, as they say in contract law,
Yeah.
right? It's got to happen now. It's got to be happen quickly because what we witnessed yesterday, and again, I'm not a tech guy. I mean, I know enough technology to be dangerous, but that's about it. I can take a website down by mistake, but not really build one or create or audit a smart contract. But what Ethereum pulled off last night, I mean, I think it's historic.
Yeah,
I mean,
definitely.
if you were an ETH holder and you went to bed last night, and I like with another bunch of crazy stayed up, late into the night to see what's going on. You could have woken up the next morning and gone from proof of work to proof of stake and had not a clue. I mean, if that's not genius, I don't know what is. And I'm thrilled that Vitalik is a wonderful example of what Canadian entrepreneurs can do.
Yeah.
And I'm just really
he's
impressed
from
with their whole
Toronto,
team, the way
right?
they did it. Yes, he is.
Okay.
And my point is that now that this technological feat has been performed with a fair number of skeptics, again, I'm not making predictions about the coins. This is not investment advice. This is my personal opinion, is that a bottom has been established in my view. And whether this is going to be the right number right now or not, I don't know. But the fact that an enterprise that is not that old has accomplished something so profound technologically and from a not just technology. What I love about Ethereum, what I really admire about Vitalik, and by the way, if he doesn't know me from Adam, is that his heart throughout has always seemed to be in the right place. And if we're going to talk about combining technology with community and changing the world, he's the poster child in my view.
Okay.
And this is the kind of thing that we got to emulate in projects and protocols and everything else that we work on in this ecosystem.
So you think that the DeFi ecosystem is a way to get around this accredited investing type of thing with the new proof of stake Ethereum that has been now put into place?
I mean, it's possible. I'd rather see the real wholesale restructuring of the legislation to allow users to do it wherever they want. You and I may want to do it in DeFi. Somebody else may want to do it in IRL. I respect that.
Okay.
Just because I like it doesn't, and the other thing, and I don't want to veer into another subject, but the two greatest challenges of a lot of the stuff that you and I talk about, John, and look at is education. I mean, and I try and put that point forth every time I work on a project or speak to founders, that when 80% of your community doesn't know how to set up their digital wallet, you got some challenges.
Yeah.
Right. And so when we talk about DeFi, it's about education. What's staking? What are liquidity pools? If those 3, 4, 5 billion people, whatever that number is that we all want to onboard into Web3, if they're going to do that, not only do they have to be educated so that works, but they have to have the confidence that when they press a button, like they press it on their traditional online broker platform, it's actually going to work and their money is not going to disappear. So, I mean, I think we have a lot of work to do on that, but this is not a one thing. This is about accredited investor exemption. It's simply a pet peeve that kind of really started to bother me when I looked at the kind of people that had opportunity to invest in really technologically revolutionary companies in Web3, and the folks who understood those plays far, far better, but never even had the opportunity to even, let alone knock on the door. They don't even know where the door is. And even if they found it, it would be slamming their face under this current legislation and current definitions of accredited investors.
Well, what would accredited investing look like in the Web3 space? Would it be kind of a decentralized ID? Like we hear a lot about Web3 ID and a reputation system. And then in order to maybe access a part of DeFi of under collateralized or no collateral loans, it could review their Web3 ID wallet and maybe some levels of certification or knowledge that can be attributed through NFTs or POAPs or soulbound tokens or something like that are sitting in their wallet that would allow them access to certain parts of a DeFi site. I mean,
Well, so that's, I mean, I love that thinking. And I mean, I was Actually, we're looking at kind of an academy to address that right now with kind of my with my brothers and sisters in the legal guild at Bankless,
Okay.
addressing the very issues you talked about. Now, the challenge with with DeFi is, as long as you still have to deal with the SEC in terms of, are you a security or not. Now, a lot of projects have been able to satisfy that and get the right legal opinions. I think actually the vast majority of them. So there's really two issues, John. There's one, a regulatory issue, and if you pass that hurdle, then there's the privacy issue.
Okay.
And the social Web3, this whole idea of privacy is super interesting, because technically, to become an accredited investor, you don't have to know who I am.
Yeah.
But, and this is a big but, and this is kind of the juxtaposition, the back and forth between Web 2 and Web 3. What do you do with KYC?
Mm-hmm.
What do you do with know your client? Banks have to do it, and I completely understand the reasoning for it, right? So, this is like a super complicated 3D puzzle that we have to put together. That's going to take time.
Can I bother you for some definitions here? Because a lot of people that listen to my show, just like me when I first started in crypto, do not know what KYC is, do not know what AML is, don't know the difference between securities and commodities and why that matters.
Well, again, this is not, I don't want to kind of give explanations that are just too esoteric, but let's focus on KYC. Okay. KYC is know your client. So, it's an obligation of financial institutions and anybody that takes money as an investment to know who they're dealing with. And that's intended to prevent nefarious character from getting into the game. And that's intended to prevent money laundering. And it makes a lot of sense. But what I wanted to bring up, John, is how do you balance these competing interests?
Yeah, doesn't that go against what crypto's supposed to be about? Like, anybody can use it, even
sure
money
it is, but
like even machines can use it from machine to machine. You don't even have to be human.
However, the real world is still out there.
Yeah,
we're not about to live in the metaverse anytime soon. And I think that, and I'm sure some people would seriously disagree with me, but to me, the notion that this can somehow, some way, in some world exist as an unregulated landscape, I think it's a pipe dream, and I don't think it makes sense. As long as we live in a society governed by the rule of law, I think, and that's the hard work, John. It's finding that middle ground.
So you don't
it's easy
think
to be
there could ever be a completely decentralized society?
Well, okay. So now we get back into definitions.
Okay.
What do you mean by decentralized? And let me give you an example. And let me ask you a question. Mm-hmm. How many true DAOs, pure DAOs, are out there right now that you've seen, that you've been involved with?
Wow, that's when you really think about, like, the one of the most that I can think of is MakerDAO, perhaps.
Perhaps, right? So yeah. So I'll tell you two things.
Bitcoin's kind of a DAO in a way, and that's probably the most decentralized thing you can get. All these nodes voting on BIP proposals just by with their nodes.
But they're store of value.
Yeah,
they're not doing stuff, right?
Yeah.
It's when you do stuff that it becomes more complicated, right?
Okay.
So that's the real challenge. So I'll give you an example. So when people reach out to myself and some of my colleagues, and we do any consulting and that's a lot of it is in DAO formation, because everybody wants to be a DAO, right?
Yeah. Dinos, DAO in name only.
It reminds me when my kids were littler and we used to watch the Disney stuff and Aristocats. I don't know if you ever watch it with your kids. Yeah. But the song "Everybody Wants to Be a Cat." That's the song that pops into my mind every time, right? Everybody wants to be a DAO, and I asked him a couple of questions. And the first one, I asked them whether they, appreciate and they're okay and understand that decentralization means giving up control. Mm-hmm. And although you would think that we would all get that right away, myself included, it gives them a pause and they start to think about it. Yeah. And the second thing, and the biggest consequence of becoming a DAO, and this is where there's going to be a lot of challenges, is when as the founders of the project or the core team, you give up control, you give up your treasury.
Yeah.
And when you give up your treasury, that's the ball. that's I think that that's when you make that decision, because I think that the word to decide had the Latin root of the word to decide is means to cut off any other possibilities. So when you decide to become a DAO and give up control and give up your treasury, that's it. You've cut off any other possibilities. And I'm seeing, as I speak to more and more project leaders and core teams, that they didn't really go down that path all the way to really see if they're going to embrace that. But that's why my question: how many pure DAOs do you know? So in my view, it's going to be there's going to be a lot of DAOs out there. There's going to be a lot of overlapping ownership, and that's going to bring into issue like meta governance and other facts. There's a great protocol called Sapien.network, and really impressive. They have a very cool NFT passport, and they're building a republic of DAOs. So I think that the world is not going to be a DAO world, but a DAO-ish world, right? But we're human.
Yeah.
We're not going to seek this 100% perfection. And if we can deliver on the mission of a DAO without being 100% centralized, if that's the option as opposed to sticking with the status quo, you know where my vote is.
Well, aren't we as humans always trying to create some kind of objective or external law or code? And we've done this since the beginning of time, with the 10 Commandments, with Hammurabi's code, even with the Magna Carta and the Declaration of Independence, or the Constitution of the United States. Finding some exterior law that somebody says, well, it's out of my hands. I can't make the decision. It's written in law. And so now we're doing this with smart contracts, right? To have some external source to take the responsibility out of our hands and point to that and say, well, that can't be broken. Sorry, nothing we can do about it.
But the whole notion of code is law.
Yeah.
How far can we take it?
Yeah, exactly.
Right? I mean, let's take it to its logical extreme. It's going to be challenging. We're imperfect. I mean, the chances that we've written the perfect smart contract, let alone many of them, are not 100%.
Yeah.
So I think we're still going to have to deal with a lot of back and forth, with a lot of balancing the role of protecting people versus innovation.
Yeah.
And I think that, and I don't know if you and I had talked about it offline, but this is where speaking to regulators is really important, because I think it's imperative that they get to see the world through our lens, and then we get to see the world through their lens. Because that's the only way we can find some path. Because I mean, you'll be amazed, and again, I'm going to shortly do a podcast on delegated voting. When you compare political behavior in DAOs versus, the U.S. political system, they're eerily similar. And not in a great way. I mean, look, I think that the way your founding fathers have fashioned the republic was genius. Whether they intended it to work the way it is now, that I have some doubts about that. But the challenge becomes voter apathy. And look at even us in Bankless, John. I mean, as you recall, that to pass a governance proposal to lower the quorum requirement.
Yeah, people,
right?
It's like, what is it, 10%, that actually actively vote in DAOs?
So what are we going to have here? I mean, if there's not enough engagement and involvement, and again, I mean, we're diverging into a different place, but I think that as citizens of a DAO, it is our responsibility to participate, and it's our responsibility to show up. And if we don't do this, then we lose the right to complain. And it's interesting because, and I had this discussion with somebody, because I said, there's, and again, don't quote me on this, but I'm going to say it anyhow, but we can fact check it. I believe New South Wales in Australia can fine a citizen if they don't vote. I think it's something like $55. Right? I said, that's super interesting, right?
Yeah.
I mean, maybe your coins get slashed, or maybe you have to give up something, or maybe you have to pay a couple of coins into the communal pool if you don't show up and vote on a forum or on a proposal. Because without participation that is markedly better than what our political systems in the US, in Canada, and elsewhere are delivering, I mean, how are we going to build this as a community where everybody's going to have a voice, as opposed to representing a small number of people that hold a huge amount of governance coins?
Interesting. So those governance coins, they can give people a lot of power in a lot of cases. Can people speculate on that power? And are those coins a commodity or a security?
Well, that's the big question, because I'll say two things. Number one, the securities commissions, regulators, both in the U.S. and Canada, which is the ones I'm kind of a little more familiar with, they take kind of almost a bear hug approach that pretty much everything is security unless you have an exemption.
Okay, let's real
Right?
quick define the difference between a commodity and a security.
Well, again, I mean, I would just point people to the Howey test. There's a 3-prong test, and they break it down for you.
Okay.
But the point is that if you entered into like an investment contract in order to earn a profit, and that profit was going to be based on somebody else's effort, i.e., like the board of directors, the C-suite, the CEO, him or herself, then that's a security.
Okay.
If you're in there to make the money, it's a security. Now, the thing is that the commodity argument or the utility coin argument is the reason that we have Ethereum today. If I would highly recommend reading the Infinite Machine to anybody that is interested, because it tells the story in detail and probably articulates it far better than I am. And it basically, they got a legal opinion, and the SEC decided they were a utility token.
Okay.
And they're not a security. Because
For
had they
use
decided
only,
otherwise,
right? To be used in the protocol, so it has some kind of use.
you needed to pay for gas.
Yeah.
Right.
Okay.
So that made sense.
You're not going to get rich.
And
you're not supposed to get rich off of it. You're supposed to use it.
Not supposed to, right? and so what happens is that if that decision didn't go that way, then there would not have been an ETH merge last night. There would have been nothing.
Okay.
Right. So my point is that Howey test is it summarizes really well. If anybody wants to understand it, they can take a quick look at it. Canada followed that legislation with a case and with a decision that was based on the Howey case. But those are kind of the central parameters of it. So my point is, and to bring us back where we started, lots of issues in the air, lots of things that need to be debated and solved and agreed upon in order to move forward. But I think it all starts with the ability of people to have an equal access to opportunity.
Okay.
That's as old as liberal democracies, in my view, and that's really what I got to focus on. And to me, one of the real friction point is the accredited investor exemption, as is, and I think that needs to be revisited in a way that really lets people benefit from some of the amazing innovation that is going on out there as we go forward.
Yeah. I mean, I heard a really good argument in favor of accredited investing recently, and they were saying, look at these projects like Hex, that are just doing all this direct marketing to, your mom and pop somewhere who don't understand any of this, and they're told that they're going to 100x their money, and and I mean, at the same
bucket shops have been around for as long as the whole notion of making a profit has been around.
Yeah.
And I think that is exactly where regulatory authority should be putting in their focus.
Okay.
Right? It's shutting those kind of operations down because, again, just by passing the legislation doesn't mean you let people run wild.
Yeah.
All you're saying is that somebody that's knowledgeable can take a risk on the quality investment that they wouldn't have before. And keep in mind, accredited investors get access to opportunities that will never be, brought to them by these, hucksters.
Yeah.
Because, financial advisors and their accredited investor clients are pretty sophisticated, right? They're least likely to fall for those kind of schemes.
Mm-hmm.
And it's because folks don't have the opportunity to access those kind of investments that they're more likely to fall prey to some hucksters that is pitching them a 100x deal because they don't have access to anything else.
Yeah.
And they see their neighbor getting rich or their uncle getting rich or their sister's sister-in-law getting rich, or invest in good opportunities, but they'd never see them.
Yeah.
So, well, if all the opportunities he sees the 100x scam, you might fall for it,
Yeah.
unfortunately.
Well, I mean,
And that's
it comes back to this, what Open Current DAO is calling it the fresh knowledge gap. Like we have all this noise in places like Reddit and with the advent of the internet, with the advent of crypto, of all these poor people basically being able to freely educate themselves on a lot of really sophisticated topics. And
yes,
so
right.
they may be 100 times better and more knowledgeable than somebody who's some kind of accredited financial advisor. Yeah. So like what we were saying about the Web3 ID, you know, how do you certify those people to get them to the place where they can, you can bring in the regulators and you can say that these people are qualified. They might not have the moolah.
Well, I think what has to happen is that bastions of really high quality knowledge, like RelPal and like Bankless HQ, have to hopefully get themselves certified or get somehow approved to be able to provide that kind of knowledge base. Look, to me, if you could come up with a model score as what number would you need to qualify to be an accredited investor, as opposed to just straight up 200, 300 $1 million, you know, for primary residence, right?
Or what skills can you demonstrate to get that as well? You know, like either money or skills, you know?
So, okay. So before I forget, I just, you know, you did ask something about the Howey test. So the Howey test has 4 elements, right? I just wanted to make sure that we get them right.
Sure.
And they are, is it an investment of money in a common enterprise with the expectation of profit to be derived from the efforts of others?
Okay.
That's the Howey test, right? So, you know, under that definition, a lot of the stuff that you see out there is going to fall within its purview and is going to be looked upon as a security. Now, that's another big ball of wax that needs to be tackled, right? How do you define a security? How do you go about it? Do you allow people to invest in if it's a small amount of money? Because we know one of the purest ways to find investment is to raise investment within a DAO, where you have 1,000 members and they each put $1,000 each. That's $1 million, right? So those are often going to be passion projects, because very rarely are you going to get an invite to like put money in an IPO on the NYSE or the NASDAQ that, you know, your minimum is $1,000, or it's even worth after all the fees to put in $1,000.
Okay. But
in DAOs, there's a lot. I mean, to me, one of the greatest benefits of DAO, and again, we won't get into it, is liberating innovation by bringing like-minded people that have a passion for a particular subject to put in a little bit of money, but together as a community, that could move the needle, right?
Okay.
But right now, that would be under this definition, would be probably a security, you know, unless we really decentralize, and then it's not going to be derived from the efforts of others, but it's going to be derived from our communal efforts. So that's another area that has to be tackled in terms of not access to investment opportunities, but partially that as well, but access to capital formation, which is the one thing that the regulators are having issues with DAOs with respect to.
Okay, so what happens if a DAO creates a token for voting, governance, whatever, and then later on it gets deemed a security? What can happen to them?
Well, they can get penalized, right? I mean, again, I think in the U.S. it's called a Wells notice.
Okay.
You get one from the ACC saying you're in violation of the act, and you sold securities without a prospectus and without an exemption, so you're going to be penalized. Now, again, I'm not. I think it's a civil penalty, but you can probably charge criminally as well, depending on the conduct. Again, I don't know the law.
Yeah.
In the States, but
that's serious, right?
It's very serious, and it's also, I mean, from what I hear talking to folks that have seen these, you know, the enforcement is inconsistent. The penalties are inconsistent.
Okay.
You know, I've heard people tell, like very reputable people, kind of who are, you know, ideologically opposed to this kind of approach by the SEC, saying, if you can raise a lot of money, go do it and figure out the regulatory stuff later. Because apparently there have been ICOs that have raised tens of millions of dollars and paid like a $2 million penalty. And again, I don't know their names. This is what has been relayed to me, third party. And there have been ones that raised, you know, $10 million and paid half of it in penalties.
Okay, when you say ICO, it's initial coin offering, or so it's
right, which is really was the sale of a security without any prospectus or an exemption.
Okay.
So the point is that this is another big issue that has to be addressed, but that's fundamentally changing laws. I mean, securities legislation has been around since the 1930s, and it's been amended and has been changed, but not enough to allow for an ecosystem where people can invest smallest amount of money without the cost and time consumption of having to go through a prospectus, which is a super expensive exercise.
Really? So there's
Oh,
paying
yeah.
the piper right there.
Oh, there's, I can tell you just from like small Canadian, Canada is not, greatest country in the world. I'm fortunate to live here and do some stuff amazingly well. But in terms of venture capital, that's not one of these areas. I mean, so a lot of companies go public early. So, it can be, in the hundreds of thousands of dollars to get it done. On the high end, it can sometimes be cheaper, but I've seen it go both ways.
Yeah.
So there has to be, again, we can do another podcast on this, but I think that my message on the accredited investor exemption is that it's high time to fundamentally alter it in a way that, and it can be done in a way that continues to protect investors and allows for better access to investment opportunities for people that would not normally qualify as it on the basis that it is today.
Okay, so in order to kind of recap a little bit of this, in order to form a DAO, it's probably good to set some accredited investor rules to make sure that the people joining the DAO don't get fleeced. But at the same time, in order to become an accredited investor, it's like a catch-22. It's expensive, and it doesn't allow like a certain amount of noobs to come into the space, and it creates a ceiling there. So we have this whole catch-22 going on between new technology and then old regulation, and then this lack of communication between them, right?
Well, I really think it comes down to, I was talking to somebody yesterday, and they're looking to put together a DAO that's going to focus on a certain niche and raise funds for it. But what they're going to do is basically focus on accredited investors.
Okay.
That's it. Why create, if there's interest and there's demand, why create yourself a headache?
Yeah.
And they're going to wait that the legislation hopefully changes and allows people that today would not be considered an accredited investor to put in money, or they can also raise money for other jurisdictions in the world where securities laws are different. So at the end of the day, it's the knowledgeable, earnest, passionate potential investor that gets the short end on the stick.
Yeah.
They either don't have the opportunity at all, or if the opportunity is here, they don't qualify for it.
Sounds like the classic old money, new money type of.
Well, listen, like I said, these are, the technology is novel. Some of the concepts are novel, but human nature has been around for a while. So I think that still we still have the same foibles and challenges we've always had.
Yeah.
I just, hope and pray that we get better at addressing them.
Nothing new under the sun.
Yeah.
Just like they said in Ecclesiastes. Wow.
Yeah.
Oh, man. Okay. Well, we've gone on for 45 minutes. I appreciate your time.
All right.
I think you've given me a good rundown and helped me sort out in my head about all this accredited investing stuff, securities, commodities. You know a lot. I appreciate your time.
I always love talking to you, John. I appreciate it, and I think that if we change one mind in the right place, it's worth it all.
Thank you for making it to the end of this program. If you actually like this content, give a thumbs up. And if you want to hear more, just hit the subscribe button. I'm available on YouTube, Odyssey, and BitChute, and on all the major podcasting platforms in audio version. Spotify specifically. If you would like to follow and leave a review, that would help a lot. I am also available on Twitter at EurekaJohn1. That's EUREKA John, JOHN, and the number 1. My DMs are always open. Feel free to shoot me a message. Thanks again.